Hi, my name is Fernando Bender, and this is our first live analysis of SP 500 dollar index and Bitcoin. So as an introductory live, we want to show you how we see the charts because there are many analyses out there. So without further ado, here we have SP 500. It's the daily chart, and we don't watch it directly or independently. First, we always consider volume. Sometimes volume is not a real or reliable information. Whenever it is, we rely on it. So here we have, and there's a very good explanation for this higher column. It was a dispute of the CTAs, the brokers, that wanted to put the price as near as they could to 3,900. Well, they reached 3,873, and that's because they have what they call gamma, positive gamma and negative gamma, and the midterm between them was in 3,900. So by reaching there, they'll have the most profit, and by reaching there with given volatility, meaning you go up, then you go down, and then you move up again to the midpoint, you are able to liquidate positions that are long, short, and have the minimum open interest at the time of the closing of the market. And that was the reason for this particularly high column in the volume. Nonetheless, what's the cause, what's driving the prices of SP 500? Okay, so we have, for instance, so let's have a broader look. So we go from the daily chart to monthly chart. Typically, to have these ideas of what drives what, you need a higher perspective. So you look from behind, from above, from far. And we'd like to show you here that the money doesn't come from nowhere that appears in the market, doesn't come from savings. So we have here in the monthly chart a very good correlation. Correlation is not a proper word, but a very good similarity between the prices of SP 500 and the total size of the balance sheet of the Central Bank of United States, nominally the Federal Reserve. So how it comes that the SP 500 has, especially here after 2020 March, we have a particularly high likelihood of one going up and the other as well, especially till this point here, the peak in the stock market, which was in December last year. So we had from March 2020 till December 21, so nearly 2 years, basically 20 months, a very good similarity between the curves of the balance sheet size of Federal Reserve and the prices in the stock market. Well, because this money here was basically pumping the market, so to speak. How it comes? Well, that's the mechanics of these finances are not the target of this analysis, but basically the Federal Reserve prints money out of the blue and buys mortgage securities and any other thing that the banks would like to unload regardless of price, and they sell this then to the Federal Reserve. In exchange, they have cash, and that cash then can goes to funds and other market participants that borrow it from them, and then this money ends up in the stock market, raising it. So that's how it goes. Now, however, given the inflation, given the need for the Federal Reserve to curb it, and not just the inflation, its root cause, which is the size of its balance sheet, that's around $9 trillion. Well, they start, the party went over, and they're now about to decrease, and the market really felt it. Okay, if we check this in a logarithmic scale, the fall will not be as big, but there is a good way down. And notice the high sensibility that SP 500 had with a very small decrease in the balance sheet. Well, why not? Let's put here logarithmic as well, and compared to in the way we're up. So as the balance sheet was expanding, there wasn't a corresponding expansion in the SP 500. However, at the moment it stopped expanding and had a minimal decrease. SP 500 fell sharply. Why? Because they react to the future, not precisely to the present. And so here is the point. There's another indicator that we based on, which is not as much correlated like this in the monthly chart, but on the weekly chart, yes, it does. So we're going to that right now. And so we move to the weekly chart, and now we can let's overlap both. So here we have the balance sheet of the Federal Reserve in orange, and in white, of course, the SP 500. Now let's move till till February, March 2020 here. That's a key period. And now let's add to it the dollar index. So because of the different scale, let's go to the regular here, and let's add here the Dixie. The Dixie or dollar index is a measure of the dollar against a basket of other currencies. So how does it go? Well, you assume a specific relation at a given point, and that is called 1. So whenever the US dollar gains value against this basket in relation to that starting point, it goes up in value, otherwise goes down. That's how it goes. And what are the currencies that make part in this basket? By the way, does this basket exist? No, it's virtual. It's just an abstract reference, but it's basically euro, yen, British pound, Swede crown, Canadian dollar, and Swiss franc. So these are the basic, the currencies to the best of my knowledge. So let's go now and back to the chart, and we see here the Dixie seems to have a different curvature. It's convex where the other are concave. So let's invert the scale, and then we see something very interesting here in the weekly chart. In the weekly chart, we have been in tandem with it since we can say September last year. So it makes now about 12 months that we are in tandem. But why? Well, if we check it here, we see that the reverse or the inverse scale of Dixie, the dollar index, which is this blue chart, since March 2020, it has anticipated basically the curve of the SP 500. So as the Federal Reserve balance sheet assets or balance sheet size, it's the same, they are in conjunction, they are in tandem, they are coincident indicators, meaning they move together in time. We have the dollar index anticipating the moves in SP 500. So we had the bottom here precisely synchronized with the bottom in the stock market. And after this spark here in the balance sheet of the Federal Reserve, who would say that the dollar will go strongly? Well, in fact, it weakened. So as the dollar, this curve goes up, the dollar effectively goes down, the dollar index. Why? Because I reverted it. So this is the original scale. So what happens is the dollar weakened initially, but at the bottom here, it anticipated the peak in the stock market. Afterwards, as dollar index left the bottom, so the curve left its top, the stock market continued going up, but after a while it also moved backwards. And that we find here in the weekly chart and leading indicator for the SP 500, which is the dollar index. So in our view, according to this chart, as long as the Federal Reserve balance sheet does not increase again, and as long as the dollar index keeps increasing, meaning this chart keeps going down, even if it stops here, so it's enough that the balance sheet of the Federal Reserve does not increase from current levels. And it is enough that the dollar index don't devalue. It retains its value, doesn't need to go up in value. That is enough to bring the SP 500 down. However, we will look in a new episode what are the components of the dollar index and where are they going. So by now we wanted to show you that the SP 500, which is the main index in the stock market of United States and a reference for the world, it has a coincident indicator that is the balance sheet of the Federal Reserve. Normally we will use M2, but they stopped updating it since July this year. So we went back to the Federal Reserve balance sheet itself, which is a good proxy of that. And the inverse dollar index. So as the dollar, the Dixie, goes down, SP 500 can go up and vice versa. So right now, it suffices that the dollar index retain its value, nearly 110. It doesn't need to go up more. Just retain it. And it suffices that the Federal Reserve balance sheet doesn't increase. However, this month, we're starting with QT, which is quantitative tightening, which is precisely decreasing the balance sheet at a pace of around $80 billion per month, the double of previous QT. And we're not doing this with interest rates at zero. We are about to have perhaps 75 basis point increase this month, 23 September 23rd. So the prognosis of the SP 500 is that it goes down. So suffices to say that this that we saw here was a bear market rally, and so much for it, and now we're moving down and likely to move down fast, and that will be clear once we take this bottom here. But again, it suffices that Fed doesn't pivot, meaning it hold on to its promise, will it, of decrease its balance sheet, of shrink it to more sustainable levels, you name it, and that the dollar index retain its value, meaning that the dollar remain stronger or keep its relative strength to other currencies. Will it? Well, that's the topic for our next analysis. Thank you very much. My name is Fernando Bender, and this is also a sample of our service Traders Digest, which has this specific URL here where you can check, and also you have links to our technology, our trading bots, and what we do for the community. Our company Greenfield, the endless quest for the best, is up. It makes more than 10 years now that we are in the market and analyzing data and dealing with bots and cryptos. It makes around 4 years. So my name is Fernando Bender and I'm its developer manager, and it's a pleasure to be here with you. We want to make this periodic, like most likely each Saturday, and each time we will add a new aspect of our analysis. We hope to see you again next week.